All right, guys, welcome to another live stream. Welcome to another live stream. This live stream is titled Exploring Covered Call Options. Now, I don't trade options at all. I used to trade stocks back in 2012 through 2015, and maybe a little bit earlier than that. I probably started 2010, but I think I got really into it towards the end of college, and I think I did it for 3 years. I didn't make much money doing it. I was trading penny stocks, so it was stocks below $5. I think I ended up losing like 3 to 4 grand, and I just said, okay, I'm not going to do this anymore because I didn't want to lose any more money. So yeah, I haven't really traded like day traded like that before, or since then, I should say. And but right now, I'm really into holding assets for the long term. But I'm looking for a way to, make additional money, relatively safe. Right now, when you think of options, most people, you know, what you hear about options is that it's, you know, unsafe, right? A lot of leverage, and you can end up losing a lot of money. I know some people that have lost tens of thousands of dollars trading options, and you hear stories all the time. People blow up their account, they lose 30 to 40 to 50K plus. They lose all their savings and things like that. But I've been, you know, I've been, I wouldn't say research. I've been educating, I've been educating myself on cover calls, and cover calls are a little bit different than your standard options, right? So, like for your standard options, you would buy, an option or two, and each option is worth 100 shares, right? So if you buy one call option, that's equal to 100 shares of whatever stock you're buying the option in, right? So it's a lot more leverage, a lot more upside, but then you have that risk. Now, covered calls are a little bit different, especially when you sell them, right? So for covered calls, it's called covered because you're gonna have the shares in your account to be able to sell them if somebody exercises their option. So, so just to give you an example, let's say you wanted to sell call options, cover call options on Robinhood, right? And let's just say Robinhood stock is $10, and you wanted to sell one call option. You would need to have 100 shares in your brokerage account to cover that person that bought your option, and if they exercise it, you need to have the 100 shares to give over to them, right? So with that said, your position is covered. So if somebody exercises their option, the option that you sell, the call option that you sell to them, you have the 100 shares to cover them. Now, obviously, they don't get those shares for free. You're selling the covered call option for a premium. You receive that premium instantly, and you just basically give over the right to buy your shares at the strike price. Now that's a little bit, probably sounded a little bit confusing. This is options. When I first learned about options, it was always confusing to me. So that's why I recently just bought a book. So I'm gonna get the name of the book really quick. Give me just a sec. Let me see. I just bought it on Amazon because I know the all the terminology. I know the gist of what cover call options is, but I definitely want to start from the beginning. Like if I'm gonna build up a brokerage account so I can then start to sell cover call options, I want to learn the foundation. Even though I kind of already do, I just want to start from the beginning, and I want to build my way up that way. And the goal is not to make a killing maybe later on, but it's just to first one, the reason why I'm exploring this is to see if it works, right? If see if I can implement it myself and try to generate, a few $100 a month, nothing too crazy, and see how that goes, and then see if I can scale up. I think that's how you should always do everything. You should start off small and then scale up once you get more experience and you just feel a lot more comfortable in the space. Okay, so the title of the book that I bought on Amazon is called Cover Calls for Beginners. So I honestly did not read. I saw that it had a good review on Amazon, so I just picked it up really quick. I'm that type of person where it's like, okay, I decided I want to explore cover call options. Let me buy a book. I saw it was the best rated book for or one of the best rated books on Amazon for cover call options. So I went ahead and purchased it, right? So I didn't really think about it. I just said, okay, let me buy it. It was $16. I made the investment yesterday very quickly. And yeah, it has 866 reviews on Amazon. So I'm pretty sure I'm going to get some knowledge out of it. It's probably going to be the basic stuff, but then um, that I think that's what you need to do. You need to start with the basics and then work your way on up. So the plan is to read that book. I think it's like 100 pages. Take some notes, and just familiarize myself with the basics of call options. And then from there, what I plan to do, I know people that have a couple of courses that they show how they do cover call options. Right, so I'm gonna purchase a course, after I read the book. That way, I have some knowledge. I'm pretty sure that the book or the course that I buy will you know, give you like a high level overview of the terminology and stuff. But I'm gonna do that with the book, and what the course is for is to basically say, okay, this person has done it successfully. Now I'm going to go and mirror what they do and try to replicate that, right? Maybe it's not the same. Obviously, it's never going to be the same results, but that's kind of how I learn. I was like, okay, I want to learn the basics of this topic. And then, you know, whether that's through a book that I bought, in this case, I bought the book. Now I'm going to go and buy a course with somebody that has been successful in the space. And I know a few people I think that like offer a course. I'm not going to mention them now because I want to go through it and see if if it's good stuff. And then if it is good stuff, I'll recommend it. Or maybe not. I want to just implement it first. I think people should always find their own mentor. Um, it's, you know, you when people recommend like mentors to other people and then it doesn't go so well, they're like, oh, that person recommended this. So that's why I don't really like to do that. But yeah, I'll definitely let you guys know how it goes. And then what I plan to do after the course is obviously the next step will be opening a brokerage account and then actually implementing what I learned. But first, like I said, the first thing to do is to just get a basic understanding of how cover calls work. And like I said, I gave you guys a brief overview, but again, basically you're covering, you're selling the option to buy your stocks at a certain strike price, right? So, and the reason why this is a lot safer is because you already purchased the shares. So let's talk about the risks that are present. And this is what I did too. I analyzed the risk, and I said, what's the worst that can happen with cover calls? Now, right, let's say you buy 100 shares of a stock, and you buy it at said price, $10, right? Now the strike price most likely is going to be a little bit higher than what you bought it for. Or should be higher than your average. So it should be, let's just say 10, let's just say 10.50, or actually let's just say 11 bucks, right? So you bought it for 10, the strike price is 11. So basically, the person that purchased the option could, sell that sell or buy back those shares at 11 bucks or higher, right? They could buy back it. You could buy back your options. Well, they would be selling it back because they already bought it, right? So whatever the inverse is. So if you sold it, you would have to buy it back to close out your position, and the person that bought it would have to sell in order to cover their or close out their position. But yeah, so let's say you open it up for 10, and then your strike price is 11. So that person could exercise their option to buy the shares at 11 bucks, right? So the worst that can happen is that it gets to $11, and they buy those shares at the strike price. Now I'm trying to see too, they're buying it at the strike? They wouldn't be buying it at the strike price. The strike price is what they can exercise it at, but I think they can buy it back at 10 bucks, right? So they basically can buy it back at 10 when the price is 11. So they get that dollar spread, right? And you lose the upside, essentially. That's what that's your loss. Instead of being able to sell your shares at 11 bucks, the market price, you can only you have to sell it at 10 to the person that bought the option, right? So yeah, but you get the premium right away. So it may be 20-cent premium for that 100 shares you got. So you made 20 bucks instantly as soon as you sold the option. So yeah, I think it's very out of all the option plays, like I wouldn't do the leverage. I'm not saying I would never do it, but I want to start off with this first because from what I seen, videos on YouTube and other people, this is the safest way to get into options, right? And it seems like you could generate, a decent amount of money. I think easily, like if you get really good with cover calls, I think you can. I think you can generate, an additional 500 to $1,000 a month, pretty easy once you get good at it, right? I think generating an extra 500 to $1,000 additionally, and I think that's good, right? And it's not very low labor. You're not doing anything that's going to strain you. It's just that initial learning curve on how things work, what stocks to buy, right? So okay, so if I look at a list of things that I would want to learn first is one, whatever brokerage account that you have, figuring out how to navigate through that brokerage, right? And being able to pick options and things like that. But then two, figuring out what stocks to purchase in order to do these cover calls. Now I hear that it's good to do cover calls with stocks that are in the moment very stable, or a little bit volatile to the upside, because you don't want it to go lower either, right? Well, actually, no. You actually, it would be not that bullish, I would say, right? You don't want it so bullish that it hits your strike price. So I guess, yeah, it would be, not so bullish in the short term, but, very bullish in the long term, right? Because that's another risk that I'm seeing with cover calls, is that if you don't buy a quality company, and let's say your expiration date for the option is 2-3 years out, and you bought it at 85, um, and you don't buy back because you sold it. You don't buy back your options. You could potentially, you're if it's not a good company, could potentially the price of the stock can go down, right? So that's a risk too. But they say that you should do cover calls for companies that you believe in, for companies that you were going to hold for a long time. It's just that you see some short term bearish movements presently in the market, and you want to use your portfolio to sell covered calls on. Now, I don't have a stock portfolio currently. I just have crypto, but that I think that's what I want to do. I want to open up a brokerage account, and I have some already. They're at the moment stale because I haven't used them in a long time. So, but the goal is to open up an account, and that's just gonna that account is solely gonna be for options, right? Because I want to see. I'm the type of person that likes to separate everything out. So let's just say I opened that account and I put 50K in that account. It's easy to see. Okay, like at the end of the year, I started with 50K. How much do I have in there now? Right. So I just want to keep it separate and be able to see how I'm doing with the call options. Now, again, I'll let you guys know how that book is. The book that I ordered on Amazon. But yeah, hopefully it goes well. I honestly think I've been thinking about it for a while doing covered calls, but I just never really got into it. But I'm looking for ways to make additional side income with like your portfolio and different types of strategies. And this one has caught my eye for a while. I've seen it before, but now I'm just more recently. I saw a video on YouTube, and it's gotten me more intrigued about it. And I think you could scale up too. I think you could scale up with cover calls. I think you could get to a point where you're probably making $3,000 to $5,000 a month, right? So let's go back to the risk again. So risk is that you get exercised, right? And then you lose the upside on that stock. So it's really you're not risking anything you put in to the stock that you bought because you're purchasing the shares because you think the stock is going to do good in the future. Now, I could see a strategy where you don't you buy the stock for the moment, right? So let's just say you think there's going to be some bearish volatility. You buy some shares to sell some cover calls, and then after you make your money, you sell those shares before the stock continues to crash, so you don't lose a lot of value on what you bought. But yeah, I would have to get into it and see. I think I would just focus on companies that I will want to hold for the long term, right? Now, I would probably have to break that out because what I'm thinking is like, you can't have, like, you don't want to just sell cover calls on one stock, one company. I think you want to have a basket of companies, like 3 to 5 companies that you can get familiar with and how they move and how their chart moves and things like that. I don't want it to be too technical analysis, right? For me, this strategy is buy shares. You already have the insurance, and you just want to sell options to the people. And remember, like the options market, it intertwines. So when you're selling, somebody's buying. Like the people that do the risky call options are the people you're selling it to, right? So I don't want to be part of that side per se. I think there's some strategies that you could do with not covered calls, but I want to do covered calls because again, I don't want to get into like what I used to do before with trading, lose money and things like that. Not to say I wouldn't lose money here, but I think it's a lot less riskier. And I think if you start off with a bigger balance, I think it'll be easy because then you can only deal with nice blue chip stocks, right? Good quality blue chip stocks. If if you get exercised, at least you know the stock won't you won't have to sell your shares at such a loss. So yeah, yeah, but that's what I wanted to talk about today. I'm exploring covered calls, and I'll keep you guys updated. First thing is get through that book, see what they say, see what the basics are, familiarize myself with the topic, and then from there, it's going to be buying a course and making sure that I can see somebody that has been successful in cover calls, and then emulate what they do, and try to be successful myself, right? So yeah, I think it's going to be a fun journey. I'll keep you guys updated. But that's what I wanted to talk about today. Happy Friday. Make sure you guys follow me on TikTok, TikTok Financial Nutrition, Instagram, Mr. Financial Nutrition, and I'll see you guys in the next one. Take care.